Hey, welcome to The Explainer. Today, we are diving into the latest earnings report from Man Industries. Now, these guys are a global heavyweight in the large diameter pipe business. You know, the essential infrastructure that powers our world, from oil and gas to water. And let me tell you, their recent performance tells a really fascinating story. Okay, let's just jump straight in with a huge number. 15,000 crore rupees. So what is this? Well, this is the total value of projects Man Industries is bidding on right now. It's a massive figure that gives you a real sense of their future potential. And honestly, it really sets the stage for everything we're about to unpack.
So, here's what we're going to cover. First, we'll get a handle on just how big Man Industries is. Then, we'll tackle this kind of weird financial puzzle from their last quarter, explain what's behind it, look at how they're building for the future, and finally, see what's literally in the pipeline.
All right, first things first. Let's get a sense of just how big of a player we're talking about here. Man Industries isn't some newcomer. Believe me, these guys are a deeply established force in the global pipe manufacturing world.
This timeline really shows you their whole journey. They kicked things off way back in 1996. Over the years, you can see them just constantly expanding, adding specialized coatings for tough offshore projects, and get this, just recently they've started testing pipes for hydrogen transport. I mean, that's a clear story of a company that's always leveling up its game.
And these numbers, they really put the scale into perspective. We're talking over 1 million tons of pipe capacity every single year. They've supplied enough pipe to stretch halfway around the entire planet. With a footprint in over 30 countries, this is no regional player. They are a true global powerhouse.
Okay, let's get to the heart of it, the latest financial results. Because on the surface, the numbers from the first quarter of fiscal year 26 are, well, they're a bit of a puzzle. And that's exactly what we're here to solve.
So take a look at this. On one hand, you've got revenue, which is basically flat, down less than 1% from last year. But then you look at profitability. EBITDA, which is a key measure of how much cash the operations are generating, is up almost 40%. And the bottom line profit, that surged by nearly 45%.
So that's the million-dollar question, right? How in the world does a company's revenue stay flat while its profits just shoot through the roof? This wasn't just some random fluke. It's the result of some very, very specific things going on. And this next section is where we find the answer. The story of this quarter is really a tale of two opposing forces. You've got some external headwinds that kind of held back sales and an internal strategy that dramatically boosted their profits. So first, that little revenue dip. The company was super clear about this. About 150 crore worth of export shipments got delayed. The reason? Geopolitical issues and just not enough ships available. But the key word here is delay. The stuff was ready to go. It just couldn't ship in time. So that money isn't gone, it just gets booked in the next quarter.
Now for the incredible profit surge. The most important thing to get here is that this was no accident. It was a deliberate strategy. They made a conscious shift to focus on higher margin, value-added products. This means they were actively choosing the more profitable projects and, maybe turning down some of the lower margin stuff. It's a classic case of working smarter, not just harder.
And hey, you don't have to take my word for it. Management was really direct on their investor call. You can just hear the confidence in this quote. They basically said that the high margins we saw this quarter are just the beginning, and they'll probably be even higher for the full year. That's a huge signal that this focus on profitability is their #1 priority.
So how does this all play into the future? Well, Man Industries isn't just tweaking things for today. They're making two absolutely massive strategic bets that are set to completely reshape their business for tomorrow.
And these are two very different bets. On one side, you have a huge plant in Saudi Arabia making a workhorse product for the oil and gas industry, tapping into massive local demand. On the other side, they're jumping into a super high-tech market in Jammu with stainless steel seamless pipes. That's the really specialized stuff. But the goal for both is exactly the same: capture much higher margins. That Jammu project in particular looks incredibly profitable, thanks to government incentives.
So, with all that future stuff in mind, let's bring it back to right now and wrap up by looking at the company's immediate outlook. What does the order book actually look like today?
The current confirmed order book stands at 3,200 crore. This is work that's already locked in, scheduled for the next 6 to 12 months. It provides a really strong foundation and tells them they're going to be busy and making money for at least the next year.
And this trend of rising profitability, it is not a one-quarter fluke. This chart shows their EBITDA over the last year, and you can see a clear upward path. Even with that slight revenue dip, this recent quarter's performance is way stronger than the same time last year, which just reinforces that whole margin expansion story.
And looking ahead, management is not shy about their confidence. The managing director basically said on the call that he expects the second half of the year to be very, very robust and much, much higher than the first half. I mean, that is a powerful statement of intent right there.
So where does all this leave us? Man Industries has a super clear strategy for profitable growth, a solid order book, and 2 potential game changers on the horizon. The question that remains, though, is a big one. In a world full of geopolitical and logistical risks, can their sharp strategic execution continue to outpace all those challenges? That's really the core tension to watch as they build their future.